What are the strongest momentum companies on the ASX right now? Which companies are getting loaded up to be the next market leaders? The 30/30 list answers both these questions each week. And we've got Gary Glover explaining the charts, the setups, the trading insights to learn from. Our members get access to this list at the same time Gary does, just after lunch on Thursdays. Plus also the opportunity to ask questions to be discussed here in this recording. So join the channel to get the whole list and the same access as the other members. Now, over to the markets and the charts this week. It's been a bit of a wild ride. Some record days in some other indices like Japan's Nikkei. There's also been massive washout, which often cripples momentum. And momentum leading companies can be hit pretty hard. So when we're looking at a market like this, Gary, what does a trading event like this mean for you and momentum trading?
Yeah, no, it's an interesting question. It's probably a good question there. Yeah, it's look, it's impacted some of those momentum reasons, but not all of them. Like a lot of them still held up pretty firm here. So, but yeah, I mean, in terms of your own profile stuff there, what you sort of find there is that if you follow, like Trade Align and those sort of, the top performers and the US investing championships and just like a lot of the pros and stuff there, they will get sort of stopped out here. As sort of stocks break through the, whether it's the sort of 20 or 21 day moving average or whether they break through the 50, they'll be basically sort of stopped out there. But then they're going into cash here. So really, a market event that has a sort of sell off there, for me personally, it's sort of like, you can sort of see that market was getting a bit squeezed there. And, there were sort of signs of vulnerability there, particularly the banks to me, that they look really, really rough there. So it's always a point that I know so many of any, one of the things he often does is he will lighten off and he will tighten up his stops and potentially have a few shorts as well. So he'll often, and that might be counterintuitive, but to be long some stocks and to be short some indices as well. But then you're kind of almost sort of betting that your longs are going to outperform the market. Even the market, you hope your longs, you still got the VCPs, wherever it is going on, they might hold up better than the overall market. So I do see Minervini do take a few short index positions occasionally, which I found interesting over the years as well. And even some of the other guys as well, some of the but I think most of those momentum, most of the top traders there will have their stops in place, and if the market starts to get a little bit fragile, they'll tighten up there. And then if the 50-day moving average gets broken, Chris, that's when they normally sort of lighten off. I know Mike Webster's sort of big one on the 21-day moving average, so stocks need to be sort of above the 21. If they break below the 21, then that's pretty negative. Even the Nasdaq being below the 21 is pretty negative there. So I think to see how we crossed. You look at this. This is the 20 here, all the way up here.
The green line. Yeah,
the green one. We've crossed this one here. So I know Webster uses the 21. So as soon as the Nasdaq crossed the 21, that would have been an indication for him to lighten the portfolio, to lighten up here, and to either use some instruments for hedging or to trim back the positions as well. So that's sort of something I know that he uses a lot. He has talked about the 21 quite a lot. So there's a reason why these guys manage millions of dollars over years, because they look at the tools that sort of work over time there and back test these things year on year and year. So so me personally, I still had a few longs on as the market sort of fell away. I had tightened those up. It's getting a bit nervous there, and I had a few bank shorts as well. I just, the banks, they're just crazy at, seeing sort of moves there. I had a bit of timing for some highs. It's not the best sort of setup to be trading there, but when they're trading at 24.5 times there, and they're sort of running into like 2.5 year cycle sort of peaks there, and I am pretty long across my portfolio as well. It's just seemed like a pretty good hedge at the time. So the shorts there probably saved my longs, and that helped me out a little bit there. But then you sort of, as you unwind shorts and you get stopped out on your longs, your cash builds up here. So now, I've managed to sort of protect the portfolio. Maybe you're down a little tiny bit, but then you're back in cash here and you're back in a safe place. So my position sizes have actually, the stocks that have held up pretty well. Things like Sonic Healthcare, that's really shown no weakness at all. So that's sort of stayed pretty strong here. So that stock's, still in the portfolio for me. And then, we're looking to try and build that, try to find other stocks that have held up there. This is a great time where the market has that weakness. You're looking for the stocks that hold up pretty well. So we're seeing, property trusts, healthcare, some of the biotech, just a few different things sort of pop up and show you some relative strength there. So we just see looking for those stronger names. So interesting period, but it's a good lesson to be sort of to be looking at there. Sort of, I think you've either got to have a process for lightening off, and if look, if it hasn't worked out for you, and you have had a bit of a drawdown here, then probably need to go back to the drawing board and actually create something in. So you'll find that the great traders there will have some rules around markets breaking down. I mean, William O'Neill, any stock, if the Nasdaq broke below the 50, he pretty much out of everything. And if the stocks basically break the 50, you'd be out of those as well. So I know now that that Webster's below the 21, he's out. So they've trimmed. So they'll be all the best guys will be they don't want to let all their gains away and have big drawdowns there. So you really have to sort of follow and tighten that. That's why I run probably 95% sort of stops on everything. It's not very much that I don't have sort of stops on.
So with the market taking the hit that it has, the hedges that you had, particularly on the banks, have helped offset it. And as you noted, some of the momentum companies have fallen back. Some of your longs got stopped out. But yeah, this chart here, this one, well, it's up almost 100% when the market's sort of getting torched and looking terrible. So it's kind of still showing momentum, relative strength in the market.
Had a catalyst there, Chris, as well. So I mean, this obviously you saw this had a bit of a run here early in the year, and then we're sort of tightened up in. You could sort of see this as a bit of a VCP, but it's a really drawn out, tight sort of pattern there. But then we did have this catalyst day there, so we had enough positive update from the company, sort of post sort of Google losing the Google contract there. They've done a lot more work in China and other markets here. So I've actually picked up some business in other areas. And so it was a bit of a change in character for the stock as well. You can sort of see that it's had a big move, big positive update there, and big buy in there. So that is a change of character. The only negative is we've had the stock's been in if we look at the weekly on the stock here, we have a ton of losers there. We've got, wow. But that volume, that stands out here. That's pretty significant. That is definitely a change in character sort of volume there. So we had that sort of surge there, 1, 2, 3, and then it did pull back for a couple of days here, and then it's gone again. So I had a lot of move there. So I was sort of thinking about how do you sort of trade these and dress these? It's a little bit difficult there. But that first day there is sort of that's sort of to me that's a bit of a game changer trade for me. That's what I in the stock space, if something comes out which sort of changes the whole game for that the stock and how it's viewed, that can be where it can perform as well. And if you were looking at this one, you potentially could drill into the half hourly, Chris, as well. So it had a big run here, so it took off there, then the whole thing pulled back here, and then pulled back, coming back here, still makes a lower high, but eventually it breaks above a little swing high in here, around about 72 cents there. So again, if you sort of hit that big shot up there, you're looking for the VCP, looking for a little B-wave break or something there, you can, I think I mentioned it a few times there, you could drill into your half hourlies and have a look at that, something like that, for an entry, but I probably wouldn't be looking any deeper than that. I wouldn't be looking at 10s or 50s, 15s or 5s, things like that. I think you're getting 2, but it's sort of, it is interesting there because that did have a bit of a burst there, pretty strong move, bit of a pullback there, but it's got a lot of losers to get through, so it's going to be hard work for the stock here, but that is a definite change in character for the stock here. So it would be now one that you would be watching here, as much as we know it's going to have lots of losers there, to try and push through. WTM was sort of number 4 on the list there. That's still up okay here actually, but it just looks like it's sort of starting to lose momentum here. It looks like it might go through a bit of a sideways consolidation there. So did see that, there wasn't too much selling on the pullback there, which was okay there. But then I tried to rally here and a bit light, and then we did see a little bit of selling here. So might just go through a consolidation there, but that's had some pretty impulsive drives and sort of sideways orientated moves. Yeah, nice little VCP in here, and then another move through here. Some pretty good volume too. That's pretty chunky. So this is pretty good volume here. So this one here definitely goes on the watch list there, because we sort of could go through another time-consuming consolidation and then go again. Oftentimes when we look back at those biggest winners, they have that big surge, congestion, big surge, congestion there. Sometimes that congestion can last a while. We go back and study those bigger winners there. Chris and I are we're working on that evil bit at the moment of the biggest winners in Australia there. Is that the one thing I sort of see there, if you see some of those congestions can be 2 to 5 months, so they can last quite a while. So oftentimes, this is one thing about, when you first learn about Elliott Wave in year 5, in year 3, you see a little three-way pullback, you think, oh, time to buy, but oftentimes it doesn't meet the time criteria. If you actually learn about how long it takes, the time should be at least the same as the pullback, and sometimes it can be like 1.6 times the length as well. So it can be, so if you learn the timing rules there, actually it's quite different. So that's why looking at how these big moves in the past, they roll out, how much time they can congest for is pretty important there. So sometimes these things really use up a lot of time going sort of sideways. So, but sideways is good. So and there's one there, that RIM, which we talked about. This is one that we talked about probably the last 3 or 4 weeks there. But I like the chart here. It just doesn't meet my filters because it's below 30 cents. But this did a really strong move, 100%, big volume. It's had a pullback there, like a little bit of ABC. Now the whole thing's tightened up, BCP, and then we've broken out of this pattern here. So pretty good setup here. So got pretty good volume again, Chris. So it's pretty solid there. But that's what we're looking for. We're looking for that big move. Then we're looking for a time consuming there. I mean, that's sort of from the high there, 21st of March, through to 17th of July. It's 4 months. So that's our sort of, I'm looking through most of these, thinking that a lot of them are in that sort of 2 to 5 months sort of. That's where you'd probably put 80% of them in that time frame. So that's why when you see this little ABC, first one down, that's probably not time to, it's probably going to take a while to keep going. It might have been a good entry, but it's going to take a while. You're better off waiting for this whole thing to use a bit more time there. So, number 7, QHL. Just got this down as a bit of a watch there, just because it has had a pretty decent burst, and there's some pretty decent volume on that way, on the way up, Chris, which is good. The big negative is that it's pretty much given up more than half the gains in about 5 trading days. So that's not so good. You want to see that big 100% move, and then you want to sort of see it maybe sit in the top quartile and hold in that quartile for that 2 to 5 months. 2 to 5 months sort of move there. So to lose 50% in 5 days is probably not a sign of strength there. But yeah, definitely one to watch there, because it has had a bit of a good move there on pretty good volume. MAU, I mean, this stock's been on the list there for quite a while. It's magnetic. So, we sort of had this, I think, go back a bit further, they did have this sort of burst, have that sort of, we're looking at, 47 up to, dollar. So had that sort of definitely doubled in sort of in price there. There's some reasonable volume throughout that period, and then it sort of did sort of congestion there as well. So it did go sort of had a little ABC, a bit of an expansion in there. That's what Elliott refers to as the ABC flat, but it can expand, slightly as well. But then the whole thing does sort of go sideways for a while, just sort of stays in a sideways grind here, and just until eventually it does sort of poke through here. Bit mixed through here. You'd probably want to see this a bit lighter. Like normally those better charts, you see the bigger volume at the start, you see the lighter volume through the middle. So this has probably got a bit more. It's not the ideal profile in terms of seeing those lighter volumes in the consolidation phase. But it does sort of come out here, and it does break out on pretty good volume there. You get a nice surge there. You get a classic retest of the breakout zone. It's just beautiful. That's what I'm talking about. Even if if you see this, or maybe don't look at this every day like we do. If you're at home on the weekend and you've seen this surge and you go, oh, it's already taken, it's already broken out in my VCP pattern. There's always hope there, because around about 50% of these will come back and do the little throwback, or they'll go back and retest the break zone. So not all of them, but I'd say probably about half of them will come back and give you another chance there. So I saw this come back, retest the zone there, and then it's gone again. So I thought it's an interesting chart. MAS pretty solid there. OSL number 9, still on the list there. It's into the daily there, so it's had a pretty big surge here. So 0.4 to 1.4, so that's more than 100% there. So probably about 150%. Pretty chunky volume too. Pretty, So if I've seen a couple of fund managers go on the register there, so that's always going to pick a rise up as well. So, but I think it's had a bit of a hot run here. I think I did say to you last week, probably thought this was probably due for a bit of a congestion, a bit of a cool off there. So maybe this goes, sideways for a while, but definitely one to be sort of keeping an eye on there, just is what's happening, company-wise and obviously share-wise as well. BMT was one that I've noticed that's had a bit of a pop here. I think Claude Walker, Rich Live, actually was talking about this in his report, saying he just thought the software company was undervalued versus its peers, and so about I think a couple of days later it did pop there. So I'm not sure they're reading his report or not, but sort of I think a few competitors in that space, and it's sort of with the sort of same numbers, we're a lot more valued there, and just sort of talk about potentially being a bit of a take. So it's a bit scrappy, this stock. It's a little small, too small for me personally, but it has, the problem is there, you see how it had these really sharp surges, and then it's sort of settled back here, so will make it a dangerous share to trade there, but definitely one to sort of keep an eye on there, maybe for maybe more investors or long term there. ALC, this is another sort of software, that medical space sector. So this was one that was flying there in previous years there. So it had some pretty big moves there. So I think it's got some AI sort of softwares, properties that helps that medical space. But it's after it got a bit hot there, it's all cooled right off here. But has come back here. But one worth keeping an eye on there, just because it has had a few impulsive runs there, so it's getting a bit more, breaking above a few swing high here now as well, seeing a bit more volume starting to come in here. So definitely one just to sort of put on the radar, just to keep an eye on that. So AL3 was sort of one that I highlighted here, because I thought, well, this has really had that big volume, big chunky move, very impulsive there. That's a
change of character.
That's a change of character, and that's the big move. That's the big volume. That's what we see from all. If we're going through all the Mag 8, Mag 10, all the stronger stock, we see this 90% of the time. This type of really aggressive push, big jump, and then you sort of see it pull back and then tighten up here. So this one's interesting there. Might, again, we're only pretty young here. We're only sort of July here. So this could use up a lot more time here, but it's definitely one to sort of be keeping an eye on. That's in that defense space, isn't it? The AL3 there, I think, when all the other defense drone shield stuff were going on there. So, so quite a newish sort of company there as well. So definitely want to keep an eye on. Look, probably run, they get a bit hot, they cool off there, things sort of dry up there, and then looking for them maybe to sort of, kick along in the business in the next few months. So just might go sideways a bit longer, but definitely should be on our radar, this one, just because it has had that that big sort of surge there.
Yeah, it's in that defense space. It was 2019, 2010. They all took off, and they did that same kind of thing. The EOS was one of them. Exactly what you're talking about. Ramped up like 100, 200%, congested for like 9, 12 months. And then it went from $3 to $11. So maybe a bit longer, but they can reload. They sort of take a bit of a pause, they reload, they consolidate, they build the base, and then.
Yeah.
So when you're saying you watch them and one to keep an eye on there, you're not really talking from week to week necessarily. It's just keep checking in each week and monitor that base, because it could be 3 months or 5 months or something like that, and then it resurges.
Yeah, so it's funny. So I said, look, since I've done the mag A, and then just going back over the model books, and then now we're sort of I'm kind of writing up, all the stronger stocks there. So we're trying to do like an ebook for all the biggest movers in the Australian market for the last few years. I'm going through those and making notes about moving averages, the percentage moves,
the
yeah. So whether they basically make me cup and handle these things, but so looking for those sort of commonality and stuff there, but they've all just had that big surge initially and then sort of cool there through a period, and just sort of see how long that takes as well. So it's just interesting exercise there. So it's got to the point there where now there is there's a 90% element there to, there's probably one or two exceptions in there, but most of them have there's a template set up for a lot of those biggest movers there. So it's got me looking for that template now. So now that I was sort of starting to look at these biggest movers and look at them in detail and look at the commonality behind them, really gives me sort of a basis to start looking at stocks. As we know that this is the thing, people realize that people see the stock jump 100% in a couple of months, and they go, oh yeah, missed it, But the first move is usually that's the first stage. If you look at all those biggest movers there, that's just the first leg up, and they can just pull back and then they go again. And then, CU6, I think I was just having a look there. I think it's now up to something like 15 or 1600% gain or something, from when it sort of started there. So the first 100% move is not up compared to the whole move over time here. So some of the biggest movers, they can really sort of pull back. And then you're looking at that congestion pull back as well. So oftentimes it might come back a third or something like that range and set up again. But looking for a pattern. So I started to build in my watch list, Chris. I've tried to sort of build a monster list. So just stocks that have had the same had that big move and then congestion, and they're on the list there. And they could be, as we know, we could be in there for 2 to 5, or just saying sometimes they can be longer. Some of them go out to like 9 and 12 months, as you say. I think most of them sort of fit in that 5 month window. But yeah, there has been some there that don't, and there's a couple there that I'm watching here. There's a big VSEC found one stock there. I looked at it and thought, oh, this could last another 6 to 9 months because it's a weekly sort of setup. So, so I put it on my list, and I looked at the company. It looks pretty strong. Financials and stuff is growing there, but it's not always going to reports a lot. It's pretty of a boring sort of sector. But that's sort of one that should keep an eye on. So just got to build this list. As traders, we're always trying to rush, in there and these moves. So just realize these sort of they take a while. They sit in these lists here, Chris, for a long time as well. They sit in there much longer than we've done this for a few years now. They just stay in this list. So they're there and there and there, and then maybe they go like a little consolidation, maybe pop out. But then a few weeks later they're back in there again. And so the leaders just keep popping up in these lists, repeatedly. It's the strongest names there. So just got to look at there's a certain sort of setup issue you're looking for there for the strongest ones. I thought this one was pretty interesting. That's the this rice grower is the SGLLB. It's had a nice sort of run. It's had a pretty decent move. And there was a little VCP in here, and then the whole thing tightened up and then broke out again. But last thing on the chart here, Chris, has got hit the top here. We've had 1, 2, 3 really low.
Heavy.
Yeah, heavy sell downs there. And then we bounced there. Pretty light volume there on the bounce there, a bit lighter there. So, they can go up there. But the other thing about this is the biggest correction too. So that's 939 high. And that's 807 there. So you're looking at, what's that, $1.32. That's the biggest correction of this move so far. So that's a potential overbalance of the trend there when you see that. So got 2 things there with the negative heavy selling, and we've got a correction which is bigger than all the other previous moves as well. those are negative. Those are things that, I learned from McLaren over the years, that those are negative signs there. So this is either going to go through a consolidation there, or it might pull back here. But with those overbalances, sometimes the overbalances, most of the time they go back up and make a first lower high. Sometimes they can actually expand to a margin new high, but most of them don't go on with it. And most of it, if they went to a new high, they might fail there and then expand back here. So, but yeah, when you do see an overbalance there, you generally get one opportunity maybe to get out of it at a slightly better rate. But yeah, this one's just got a little bit of danger written on it at the moment there, just because we're seeing probably two negative signs there, which you don't want to see. If you look at all those strongest names, we don't see activity like that. Then normally, most of them you sort of see there is you see big surges and then they pull back and very light volumes there. Who would have thought AMP?
Yeah,
come and handle Jesus. Yeah. So I was watching this actually because it was showing all the strength. It was holding up there, and yeah. So nonetheless, even this pullback there, that was sort of pretty mild pullback, and then did some about that. Wow, this thing's struggling to go down here. There's some good volume there, and tightened up here. We got a little bit of a B wave break in here. Oh, that's interesting. Bit messy in here, but went up to the high, pulled back there. But then obviously it's reported here. I mean that's you could have bought that on the on the obviously the update was pretty positive. I mean, at least it's had a pretty tough few years AMP, but they've guided some staff, have cut some business units, starting to do a little bit of banking as well in there, sort of doing home loans. So it's a little bit of it's a little bit happening differently within the company, but. First time I've seen the company report ahead of expectations there.
It's been a while.
Yeah, a long time here. So even though this has been a bit of a dog here, that is that's a game changer announcement for the company. So mix this in with a cup and handle setup there, you could have easily bought this, even though it's AMP. So so that game changer there is sort of still got better. So it's pretty firm here. It's actually a nice little setup here. This might go. I think everyone's probably still pretty negative AMP, but no one's probably owning it, Chris. So I wouldn't imagine that not too many instos would own this here. So might get some resistance around in the old high there, but it didn't look too bad to me. When I was looking at this, I thought, I wonder whether this can go back to the old high there, around 140. I was thinking that's a possibility there. So. But yeah, it's a bit like the iris there, sort of, don't let your bias get in the way there. But I was watching that one there, sort of, just because the price action was pretty solid there. SMI is one just to watch there, just because we've had that big strong run, use up a bit of time here. It's just sort of, it's trading okay here. Did break, I'd say this is a bit of a B wave break in here. I think we're broken above the 50 as well, but it's been building there, but hasn't really gone with it. But it is a bit of a weak tape, so you're probably going to put that into contrast there, so it's actually held up pretty well in a weak market here. So not too bad there, just not sort of the classic sort of setup here so far, but it's done okay here.
That's that purple line, isn't it? Down in the volume bar, it's ticked up a bit relative to the market. So it'll be in a weak market.
Yeah, that's the relative strength, versus the XJO. So so it's holding up versus the market there. So it's looking pretty firm overall. So so not too bad there. It's not if you're sort of trading that setup there, you would have hoped it would have taken up a bit harder there, but considering it's a weak tape, it's pretty decent there. And I think the last one there was the old Spartan Resources there. So this now, Chris, has actually had an overbalance. So that's now the biggest correction of this whole move. It has broken below the 20 as well. So if you look at the stock here, it's been pretty strong here. I think it's held the 20 most of the time in most of the previous moves there. So even on this run here, it's held the 20, touched the 20, and then now it's broken the 20, and now it's sort of broken here, So the only plus that I see here is that not a lot of selling in here. So So maybe this can go through a bit of a pause there. So maybe you get sort of, you go through a pause phase here, because we're not sort of seeing any aggressive selling there. So that is a good sign, but the momentum there, it's lost its momentum there. That's the sideways when you see this thing ramping up, and then you get a bit vertical like that. See how sort of like I think I mentioned a couple of weeks ago, I didn't like the look of this because that's a bit of an ending sort of, that really aggressive. That's sort of McLaren talks about the trend lines, 1, 2, 3. Once you're, trend, getting in that extension mode, it can sort of blow off and then, So this did look like a top of sorts to me. But so far the good signs is there's no selling going on here. So we have had an overbalance. So what that means to me is that maybe this can go sideways. So this might go through sideways for a period of time. So it might be 2, 3, 5, 9. Who knows what it is? We don't know how it's going to be, but we know it's probably likely to sort of consolidate here now for a while. So that's why sort of like if you look at those, like I know Mike Webster, who's the head trader there now for IBD, he's a big one on the 21-day moving average. So, if he was long on this stock, he wouldn't be long anymore. Yeah, it's across the 20 here, so it's probably across the 21. These guys will be sort of selling into that type of heat, so selling some into that heat, running in it. But you can see here that at the end here, after it hit the 20 there, it was basically hugging the 10 there for most of that work as well. So, you might have even potentially got forced out here. I know Kalamagi, sometimes the stronger stocks, will use the 10-day moving average once they get really vertical. So, but yeah, it's just interesting sort of stock that one. But okay, there, that's the that is the quarterly there, Chris.
Okay, so quarterly momentum landing off with Spartan, which is a big solid name. You've talked about consolidations, so companies going for a run and then pulling back. 3 months, 6 months, 9, we yet to see. And the question that we sometimes get is, okay, well, how do you identify when a company sort of resurging, when it's starting to come back up, relative strength, but not shooting the lights out yet, so not too late? That's kind of where the launch pad comes in. So I guess that's probably a good chart you've got on the screen there, where it's gone for a run, it's had a consolidation, and then on the far right-hand side, we're seeing that it's ranking high in the launch pad, and it's kind of consolidating, giving a bit of a coil. Is that fair summary of the chart that we've got here and how you use the launch pad?
Yeah, no, it is, because you had that SA, you got that big burst, big volume there, so that's exactly what we want to see. Then you have a bit of a correction there, so you can see this had a pullback, like an A and then a A, B, C there. So we always want to look for that classic sort of Elliott wave, 3-wave. That's the most and then we sort of got it. So we did get a VCP in here, Chris. Whole thing tightened up. And then once we break above, little swing mark. Because if you think about this, had the high there, lower high, another lower high there. We don't touch these until they start to break out. So this had a bit of a mini move here. So you could have traded this breakout here, 10 cents there. It did get to 14 and fail there. So maybe you wouldn't get a big window there. But that's not a bad setup there. I mean, there's plenty of these that have gone on to, Spartan, I think Spartan started with exactly this sort of setup here. CU6 did a move like this. The whole thing VCP'd in here, and then this took off, went to a new high. That was how CU6, that was the first move for CU6, was exactly this setup. So you don't know if this is going to be a CU6 or a SDK or whatever else, but that's not a bad setup there. So once it sort of comes out here, but then it hasn't got on with that. Now it's getting. We know sometimes these things take a bit more time here. So you would have been, whether you're using the 20 or whatever you use as a stop out there, you should have been stopped out here. You would have had a probably small gain, maybe, might have got stopped out at 12 or maybe 11 if you're wide, maybe however it is there. Then it congests again. The whole thing's tightened up again. So it's done the same thing again. It's now sort of tightened up here, lower high, lower high, lower high. Just broken here now, Chris, out above a lower high there. It's only gone marginally high there, but it has popped out here and it's stayed pretty tight here so far. So it hasn't really shown too much weakness there. So this is potentially one to keep an eye on. This is that sort of big setup at the start. We know sometimes these can be 3 months, they can be 5 months or longer here. So this is definitely one to be keeping an eye on there. This is actually a pretty good setup. For me, it's just too small. I don't like trading 10-cent stocks. I prefer I'm just going to stay. For me, my rules are above 30, but this is not looking too bad. That not looking bad at all. So definitely one to keep on the radar there. BMT, well, at least talked about that little merge. APW. Again, this has got a bit of a VCP going on here, Chris. Very choppy, not very liquid, but has shown a bit of strength into the high, stayed nice and tight here. So doesn't look too bad here, really. So just a bit too lightly traded for me. Doesn't really meet my trading requirements, but technically looks pretty solid. IDX was sort of one that's this made a nice little cup and handle here. I did actually trade this, and it sort of went on here, but then it sort of come back here, so I sort of got stopped there trailing this. Nothing lost for me personally, but it was a good setup. Just didn't work out. If I had if I see that chart 9 times out of 10, when I trade all 9 of them, I think I'm going to win a few of them. They're pretty well. So not all these trades win here. You just got to follow your process. You've got to take the trades to set up here. And there was some good volume here too. That was pretty healthy through here. So just didn't go. But the weird thing is that this actually hasn't come back that far as well. So tough one there, because this is quite a corrective decline here. It is still sort of holding the high lows here. So the trend is still okay here. It just doesn't meet my trend criteria for what I'm looking for. But the stock itself actually is still holding up pretty well. OML, it's got a possible change in character here because we've been in a bit of a downtrend, had a bit of a run here, just not seeing the big volume on that pounce there. So that's probably not got me too excited there. And I prefer to see a bit more volume. So not for me. There's another small one there. Again, it has broken above the swing high here. So possible change of character, no volume in there. So pretty light volume. So not for me. Thought EVO was actually pretty interesting there. This has got a few little VCPs in here, Chris. Had a bit of a run there. Go back to retest the high. I sort of did go out and have a look at this. It's sort of, it's just a bit light in here. It's sort of, light in the pullback, light in the rally here. So it's just not that exciting to me. But the daily's interesting. It's sort of definitely showing a bit of support there, I think. I did see someone talk about this company. I think it might be, if I'm not mistaken, it might be a new childcare operator. Might be the guys out of G8 have sort of
come back.
Or come out and set this one up here. So I think it could be. Hope I'm not mistaken. I hope it's the same one there. But yeah, it's still pretty small there. But yeah, possibly.
Yeah, it is early childhood education.
Okay.
Yes, Chubby Cup Care, Bright House, Roseberry House.
Yeah, so I know a few small cap managers there were talking favourably about it. So, but yeah, a long way to go there in that one. So, Fletcher, I thought was interesting there. Has broken above the 50 there. Had a bit of a run there. The sector is getting a bit of warmth there. There's a few things I think Fletcher's got a few issues there with going on at the moment, so it might be a little messy here. But this is one that I thought might recover post June 30. This was sort of one of my June 30 because I thought this is sort of like a bit of an A grade stock, which had sort of had a pretty tough year. And when you're coming into an end of financial year, everyone just wants to sell the losers, so this keeps the foot on the throat. So everyone who's sold it is probably out here, but it's had a bit of a recovery there. Looks okay here, but still got a few issues going on there. So look, I think it could recover a bit more. But yeah, it is. Look, we've had a little bit of a rally in here. Not really. The volume is a bit light. I would have loved to have seen some heavier volume in there, because it's actually been heavier volume on the down here. So we're actually seeing selling into the rally, which is not awesome. So that doesn't really meet my filter as well. AFG was sort of one just to keep an eye on. I think it's there's been a little bit happening in that sort of sector there, but it is a bit of a stock that does run up and drop a bit. So when you look at these stocks there, do go back and just one little tip there for for traders that haven't been around that long is that you see these sort of, sometimes you'll see a technical pattern, you go, oh, that looks pretty good. But then if you go back and just try and have a look at the profile of the stock a little bit, try and look at maybe 1 year, 2 year, 5 year, just see how it normally trades. And if you start to see this, you see this sort of heart machine up and down, up and down, up and down all the time. You go, oh, okay, that's not really what I see there, because that means if you get a big pop here, it's likely to come off just as hard here. So if the stock's got that inherent nature, that's probably, that should be sort of, it should just be a word of caution there as well. So, just, that's why it's important just to sort of get an idea on the stock profile there. It's funny, we were talking all week, Chris, about property trusts. So Dexter's looks pretty good there, nice little VCP in there. So we saw, it's had a nice run up here, pretty good volumes, a good setup, come back to the 50, bounced again, tightened up under the 50, under the 21 here. So, and then it has sort of breaking out here. So it's a good looking VCP there. But I went back and looked through Dexter's. I went through quite a few other property trusts there. They do have a habit of actually setting up VCPs throughout the years. But they don't have the big momentum moves that a lot of other VCPs do. They do tend to have a bit of a run, but they don't go the full amount of the VCP a lot of the time. They might only go 50 or 80%, and then they come back. Then they go through a bit of another consolidation as well. So they don't tend to have that big follow through.
Huge upside.
Yeah. So when I looked at it, I thought, okay, well, you can still trade it. Probably just got to have a tighter stop on it, because maybe not going to have that same sort of move. And they are typically lower delta stocks. So lower delta mean that the market moves, say, 2%. It might only move 1.5%. So, whereas we really mentioned traders, we want to be sort of, the market moves sort of 2%. We want to be on stocks that are moving 3 or 5. But when the market's at the heat and not many trades around, you still make money trading property trusts. And I know that, like David Ryan, who, basically won the US Investing Championship 3 times in a row, he was trading property trusts in the last few weeks. So, you still make money, these sectors there, but that just means, it's just telling you there that the markets tend to be defensive as well. So, just always worth sort of studying the personality of these sort of stocks in the sectors as well. Thought AGL was pretty interesting there. You look at that weekly, Chris, it was showing a bit of relative strength there when the market was pretty weak there. This was pretty tight in here. That sort of stayed, that stayed pretty tight. So did sort of break below here. I thought this was sort of a good little congestion there, and then it's going to get going, but it didn't end up coming back here. But it's just done a little expansion there, and then gone again. So not too bad then. Sort of, it's unusual to sort of come back like that, but yeah, the volume's pretty robust again. So solid there. I think the other ones I saw, my pages have been going sideways there. I noticed sort of Airtasker made that VCP and then broke out, and it's come all the way back straight away. So that's the type of market we're in here. High pages is one to give an eye on. That's a bit messy, a bit lightly traded, so a bit difficult. UOR, well, I think the LT was sort of one I watched there, just pretty tight price action there. That's about it really. Sort of bit tricky out there. Just I think you've just sort of, me personally, just got to really have the high conviction there, just get the process right there. Weird thing lately is just sort of seeing like a lot of those VCPs and even a couple of handles and stuff there, they're still sort of setting out, but we're just not getting it followed through. But if you're managing your risk properly, and then you get often things they'll take off and they'll move, and you just should move your stop up. But if they're failing, and then you're losing small, or you're getting to break even, that's fine there. You're still taking good trade if you're following your process. That's what happens there. You just got to keep it tight there. So, look, you do have to find some sort of hedging mechanism. So whether me personally, I'll often use the bearish ETFs. That's what I would normally use, but I I just saw a few things on the banks there that I liked there, so I put a few bear spreads, and that was a way for me to do a little bit of hedging. But oftentimes I might use the index there. I just didn't really notice, just didn't see anything obvious on the indexes to trade here. So whereas normally we sort of see some, it's a weird sort of market there. It's I've talked about the 60-year cycle a bit in the past, and the 60-year cycle has been eerily similar to what's been going on in the market to the point where the days of the highs and lows have been almost Oh yeah, I don't know if I can actually drag this in here and show you something that's weird. I wasn't going to do this, but this is so like a lot of people study cycles. They talk about you look at seasonality, you look at the 4-year residential cycle, the 10, 20-year, but the 60-year cycle is often referred to as the master cycle. That's where sort of they look at that that market 60 years ago, and we could just keep. It's essentially a generation will forget, and then we repeat ourselves. The next generation will repeat ourselves again. But the 60-year cycle can be pretty important there. So you see here at 64, the market actually rallied up to around that sort of 16th, the sort of July. Then it had a pretty sharp move down into the 5th of August, had a bit of a bounce here, and then a high, low, and 26 low. So it did sit on top of the previous high, and I think we had a low in November here, as opposed to our market, which had a low in October. But we had a deep low in that sort of that earlier year. So that was November there, whereas I think our low was in October there for last year. And then we had that strong surge here, a bit of a mixy sort of period through April, May, June, which we've sort of had, but did suggest that we'd get a pullback there, maybe sit on top of the high. The only thing, I think the high was around the 18th, or might have been the 17th, might have been one day out. The low the other day was the 5th of August, same date. Have bounced there sort of since as well, but might mess around here. The only thing different is that the 64 market was a lot stronger. It sat on top of the previous move, whereas our market has come back into the range there. So that's a little negative for me, is that I would have loved to have seen it sit on top there. Like, I think these are all, in these election years, typically only sort of get like 8% corrections as a norm. So I think the NASDAQ had like a 9.5% drop. There's a bit deeper. So what that does is just sort of potentially just makes it, with this overlap now, it's a little weaker. So maybe it'll just overlap until the end of the year. But just interesting there that look at sort of cycles, but the 60-year market, the master cycle has been, I don't know what's going on, but it's, I'm noticing it in years. I think might have been the last big commodity cycle in, might have been 07, 08, 09 sort of period there. Commodities were finding the highs in the same month they were 60 years earlier. And then they were falling and finding lows in the same month they were 60 years earlier. And equity markets are doing the same. It's like, this is...
How does that happen? How
does that happen? Yeah. And I know like all the cycle guides, they do work off 60. They try and build in the 10 or the 20. They use the election cycle as well. I mean, there's some cycles, some years that are stronger than others. Like the midterm year, October of a midterm year, that is just, just go and look at that every 4 years. That, you can look, if you got a charting software package, and it's got like a cycle line where you can basically just do every 4 years on it. Just drop it on the October midterm year low, and just go back.
Watch it.
Go back and look at 50 years of data, and you'll just go, what the hell is? Why has that got so many of the biggest lows? Hit that point there. I don't, it just happened that way. So, just interesting here. The markets were right on, just bouncing around, showing that sort of signs there. So probably just tells me I'm probably going to be bouncing around here. Nothing too negative, but we're probably going to go sideways here, probably until maybe the late sort of August there. But yeah, so nothing too negative here so far. But yeah, interesting.
Well, that is interesting. And anyone who's followed you for a long time would know that throughout COVID, the lows, the highs, you were using the cycles and using them exceptionally well. But what we've got this week is you talked about the lead up, the explosive movement, like you see on PLT, the consolidation, and then possibly become a market leader. So people will want to study those market leaders more on the ASX. Click on the screen and you'll see Gary's Mag 8 that he's talked about. And we say thank you, Gary Glover from Novus Capital.
Thanks, Chris.